Hi, trades. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 11th of August. All right. Now, this is a pretty easy run through. It's for those that are sort of familiar with the market. We're just coming down to one sort of number at the moment, and that's a great result, right? We've got the strong non-farm payrolls, tricky number to trade around. We saw some currencies start to move, and the dollar is now moving topside, as you can see here with the dollar index, nice and steady. But this is where the injection of momentum is going to come from. It's the US CPI numbers. Right. And primarily, I mean, it can go up or down here on the result, of course, but we're looking for a big number. Okay. Big above 4.5% would be ideal. That puts huge pressure, backs the Fed into the corner, and they'll have to start talking about tapering asset purchases when they're going to start talking about changing rates and all these sorts of things. Now, don't get me wrong. It's not going to happen soon, but the discussion will start. That's where the dollar starts to run. So what we're looking for is, and I'll come back, as I said, we're looking for stronger numbers, ideally. The rest of the markets here are all waiting for the number to drop, right? There's no point loading up on positions ahead of the number when you don't know the answer. We'll have the answer, and then you can get in. Now, understand trading at the time of the release is problematic. That's when liquidity will be scarce. So you really want to utilize the liquidity around some of these trend lines. You can see the dollar index around a trend line at the moment. Dollar Swiss already higher. Dollar yen's cruising topside. Dollar CAD's throwing things around a bit. It's sort of banged itself back down. And focusing on the easier pairs, right? Euro very clear. Sterling down. Aussie's come back for a bit of a retest. I wouldn't mind getting sort of back short, but if I see strong US numbers, I'm going to be keen to get short or long dollars, short Aussie, Kiwi, Sterling, Euro, but you have to be careful which pairs you pick, right? So Euro is down here in the middle of nowhere, right? Down 117.20, but if the number is well above 4.5%, all these currencies are going to move. Now, at the time of the release, as I said, the liquidity will be rather scarce. What that means is the price action is all over the place. You see gapping, you see, big moves to the downside if it's a strong US number, or top side if it's a dollar pair. So you've got to factor that in. So I would suggest a smaller trade size. If you see the numbers that are good, just hit the market a couple of times, right? You don't need to go in with a big trade straight up in case it doesn't turn out. Now, when it comes back to the number, so as you can sort of tell, I'm all hyped up for stronger numbers. Now, you got to consider, right, what happens if these numbers are weak? Well, it's going to kibosh the current, strong momentum from the employment numbers last week. It takes the pressure off the Fed, and the currencies sort of drift to the downside, or the dollar just drifts back into the range. That's not ideal. What we're looking for is, we've already got the start of a short-term trend. We want to make this medium-term. Strong numbers will do that for us. So that's our ideal case scenario. Now, on the back flip of it, if it's around 3%, like really weak numbers, then you're going to see the dollar dribble off. There's a whole range of pairs you can trade on that as well. So make sure you spend a bit of time picking your poison, right? Make sure the pair that you're trading, you're comfortable with where the entries are, and then you can manage your capital management will be structured off that entry level. That's why it's very important, where you're getting in, because where is your stop loss? That's the first question you should be asking. Anyway, so strong numbers, equity markets, they should be a sea of red, right? We'll see how this pans out tomorrow. Sea of red, that'll be a risk-off situation. So you'll have the dollar block, the pairs underneath here going down, and the dollar pairs, okay, where the dollar's the base, the first currency in the quote, they'll be going topside. Okay, so we're all waiting for this. It's been pretty much since last Friday non-farm payrolls, we've been sort of angling towards this. All we need to do is cross our fingers and hope we get some sort of variation. If the number lands in the middle, right, of the previous or expectations, well, then we're just going to be moving like we are at the moment, just slow. And it's like watching paint dry. We want to see not huge volatility, but we want to see these things breaking to the top side with a bit of momentum. That way, when you do get the momentum, you'll see a push to the downside. You get retracements, which is a second chance to get in, and then further downside moves. And you'll see that across the board. So fingers crossed it comes out for us. All the best, guys. Think about the trade before you go to push the button. Save you some anxiety and some pain hitting the wrong thing. All right, guys, have a good one. Cheerio.